The clock has reached 10 and we are live here when Renewcell has published a report for the second quarter of 2023. This is a live broadcast, so I suggest you viewers to post your questions in the live chat below and I'll make sure to get them to our esteemed guest. It is Patrik Lundström from Renewcell. Welcome.
Thank you.
So you have prepared a short presentation, but I thought before we get into that, could you summarize the second quarter?
Yeah, second quarter has been all about getting control of the process. We started off with, let's say, maybe 50% within specification, and we ended up north of 90%. And have been very clear about that. Those are important numbers. So that has actually fueled the increase that we could actually do in the third quarter. So it has the second quarter has been finding the process windows and trimming the process windows, and I think that has been quite successful so far.
I look forward to hearing more during the presentation, and Toby, Lawton, CFO, will of course join you. But without further ado, go ahead.
Thank you. So the second quarter, Renewcell, of course, we are a company, and we would like to restate this for the viewers who have not been looking at us before. But we are a company where we're making the textile value chain circular from a linear model to a circular model. And instead of pumping oil, growing cotton, cutting down trees, running it through the value chain one time, and then putting it on landfill or incineration, what we do, we are the missing link in that circular business model. We buy only 100% textile waste. We use that in our process, and then we make a dissolving pulp. Out of that dissolving pulp, we are selling to our customers who then make man-made cellulosic fibers, new yarns, new textiles, and back it goes, and we can recycle that again and again. So we are all about making fashion circular. 2023 highlights. So Renewcell 1 is ramping up, as we've been talking about. The plant is built, the plant is operational, and we are now on our way to the 60,000 tons as a first step, and then 120,000 tons sometime during 2024. The production volumes are increasing. During quarter two, we started at 1,300 metric tons, growing to 1,700 metric tons. But as I also mentioned earlier, the prime quality is what you need to look at also. So we ended the quarter with more than 90% in prime quality, which meant that we could take the extra step and actually enhancing the volumes going forward into the third quarter, which we have also reported on in our press releases. So we ended up in July with over 3,000 metric tons, which is 60% plant load towards the 60,000 tons. Customer feedback, Sanyo is increasing volumes and increasing share of circulose. Others are also working on that. Jibin has also done those statements. And we now, as I speak, we actually have the Inter-Textile show in Shanghai, where we have our people there, and there's a lot of publications being made there in the same direction. There is an increasing demand in viscose, lyocell, and filament products in order to replace both cotton but also other man-made cellulosics made from wood. So we see that interest is increasing as we go forward, and more brands are making statements in that direction. Last in line was, for example, Inditex, who now going to have 40% of recycled fibers by 2030. We are the directed share issue that we made generated 240 million SEK prior to cost. And the reason why we did that was to secure the completion, of course, of the 60,000 ton, but moreover to put the company in a financial stable footing. We will initiate 120,000 tons once we have ramped up, but towards the 60,000 tons and feel confident with going through break-evens and so forth. That is where we start pressing the button on going for the 120,000 metric tons. The 60,000 ton capex that has largely been completed. So we expect it to end up at approximately 1.33 billion Swedish. And the CapEx for the including the 120,000 tons will end up at 1.48 billion Swedish. So it's very much in line with what we have previously guided. We also had a Capital Markets Day on May 11th, and I hope that many of you had a chance to either attend it or also to look at it. It's published on our homepage, so please go in and see that, where we can also have a little bit more eluded discussions around the development of the company. The Q2 financial highlights. So we have increased our sales from Q1 to Q3 from 30 to 85 million. The EBITDA has improved from -80 to -59. And then in the cash flow activities as we only have -14 million now from investing activities, which is of course because we are coming to the end of the investment in Renewcell 1A, I would say, or the first 60,000 metric tons. Earnings per share is what it is. It's -2.8. And the ramp up, we're successively increasing the volumes then to the 5,000 metric tons per month. We feel quite confident where we are in that. Of course, we have some amendments that we are doing in this month, in August. So we have had a planned stop and some amendments that we've done in some parts, especially in the beginning, in the shredding room and so forth. We are at the 3,000 tons, and we are the second stage is of course to reach the 120,000 metric tons by 2024. And that is pretty much what we had there. But I also want to show this figure that we have, which is actually extending beyond the quarter, where you see that February, March, and April has increased, especially on the quality side. And I know I'm stressing that number, but it is an important one. It means you have your process under control. We're also now learning our process. We're starting to get the feel for it. Where are our boundaries? Which mean that we can maintain the production above 90%. And as you see, in May we had 2,300 metric tons and we sold 2,000 tons, and that's ramped up towards in July to 97% and 2,800 metric tons sold. So we are in a good position. We're starting to learn and know our process. So the next step for us is of course then to continue this towards the 5,000 metric tons, but also work out throughout the value chain and making sure that the customers are receiving the materials for their ramp-ups. So that's pretty much what I had so far, and by that I'd like to introduce Toby Lawton, our CFO. So Toby, please.
Thank you, Patrik.
It's yours.
Thank you. Good morning, everybody. Okay, I'll just start off with just a reminder. We did change accounting principles this year from the beginning of this year, so we are now reporting the group according to IFRS from 1st of January 2023. The main differences here are leasing is the biggest one, where it's capitalized. The lease of the main factory building in Sundsvall is the largest effect, and there's also a smaller effect, but the capitalized interest during the construction period. So those are the main differences in the accounting. If you want to go back and see the history, the parent company continues to report in exactly the same way. So there's the same figures as reported in 2022. So you can compare back to 2022, but I think it's less interesting now because obviously we're ramping up. And back in 2022, we didn't have the operations or the volume or the sales that we have now. So it's really most interesting to compare us quarter to quarter. And that's what I'll do. If we just a little bit on the financial overview, you can see firstly the top line net sales. We grew from 30 million in quarter one to 85 million in quarter two. So it really shows the progress of the ramp up and that we're getting the revenue from the increased volume. Quite some way to go, but good progress between quarter one and quarter two. That really has an effect on the bottom line as well, on the EBITDA, and you can see the improvement from -86 in quarter one to -59 in quarter two, and I'll come back on that, but it's really driven from the volume growth. You see the same effect dropping down onto net profit as well. When it comes to cash flow from operating activities, you can see we had -102 in quarter one. We now have -35 in quarter two, so a good improvement in cash flow, particularly cash flow from operating activities, and that's coming both from the earnings improvement that you see above, but also from a good working capital development where we have a positive change from reducing working capital in the quarter. Cash flow from investing activities also, as Patrik mentioned, coming down from 56 million in quarter one and just 14 million in quarter two. So it's largely the capex for the 60,000 tons part is largely complete, so it's lower capex numbers for the time being. And then equity here has increased, and this is really the effect of the capital raise, which Patrik also mentioned. So the capital raise, which was a gross proceeds of 240 million, net proceeds 231 million, and that came right at the end of the quarter and is then positive impact on equity. It's also the same impact that you see coming through to net debt here, the reduction in net debt, which I'll also come back to. Equity ratio, which is equity to total assets, now 39%, and the average number of employees during the second quarter was 125. Here's the income statement, and I'll focus on the right-hand side here, which is again quarter one and quarter two, and you can see the development between the two quarters. And I think it's most interesting to see how we develop during the ramp-up quarter to quarter. As I mentioned, you can see net sales increasing and total revenue increasing from 30 million in quarter one, total revenue now 86 million in quarter two, so a good increase. But I think in particular I'd like to point to the line gross profit that you see there, which is after taking off the costs for variable costs, so raw materials, energy, water, and also the change in inventories. And so there you can see in the second quarter we had a gross profit of -8 million. So that's about -10%, -9% of sales. But obviously a big improvement versus quarter one where we were -25 million. And this is really the effect of ramping up production and improving the yields in all areas, in raw material consumption, in energy, and so on. So it's that's the positive development that we will expect to see continuing as we continue to ramp up the factory as well. Fixed costs relatively stable. We have tight control of our fixed costs, and we had 51 million of fixed costs during the quarter. So that's overall driving the profit improvement from -80 in quarter one to -59 in quarter two as we ramp up. And just to point out, you can see a detailed note at the bottom, but the only difference on the income statement between the RFR2 on the left, the old numbers, and the new numbers is on the fixed costs, where there's a reduction of 6 million per quarter approximately, which is the leasing cost, which was in the EBITDA, and the fixed cost under RFR2, which is not there under IFRS. So it's a positive impact under IFRS. Cash flow, just a few words on the cash flow. Again, focusing in the red box on the right-hand side, but you can see firstly the EBITDA at the top line, which is from the previous slide. And then you see the cash flow from operating activities before changes in working capital, which is largely driven by the EBITDA. There is some interest paid as well, which is additionally to the EBITDA. And then you see the line changes in working capital, where this quarter we had a good positive improvement, which is really driven by the fact that we're improving volumes and that we're working down our inventories, which, as you know, we had built up ahead of the ramp up. So that had a positive impact of 32 million in the cash flow. And then cash flow from investing activities, where because the capex is largely completed, there's a few modifications and adjustments going on, which do have some minor capex, but much smaller levels. So we had 14 million of capex, which then drives basically a total cash flow from operating activities and investing activities, which is basically the free cash flow from the business of -49 million in the second quarter. So an improvement of over 100 million versus quarter one. And this really shows this is the effect of the ramp up, that the free cash flow impact that we're having to finance until we're break even is reducing fast. Then just a couple of words on the financing and the balance sheet. So here you see the net debt position, also between the end of March and end of June. And you can see at the bottom, you can see the net debt changed from just over 1 billion at the end of March to 834 million at the end of June. The main effect here is the new equity issue that happened right at the end of June. And that's on the line in the middle, short-term financial receivables, where you see minus 231. That's really the receivable from the new equity issue, which is transferred into cash from next quarter. So that's really what's driving the reduction in net debt. I think also important to point out that this is including leasing debt now under IFRS, so over 300 million is the leasing debt you see down near the bottom, 317 million. So if you were to take the net debt to financial institutions, so excluding that leasing debt, then you have a net debt of just over 500 million. And then finally, just a final slide, just to update on the capex. Again, nothing new here versus what we talked about when we did the capital raise. If you add up the capex basically from the last 3.5 years, 2020, 2021, 2022, and first half of 2023, you can see we come to just short of 1.3 billion. And that is basically Renewcell 1, the capex that we talk about there, which is expected to end up at 1.33 billion for 60,000 tons. And that's the majority also of the capex for the full Renewcell 1 of 120,000 tons. But we expect an additional 150 million on top of that to get the 120,000 ton capacity installed. And just a reminder that also excludes the leasing capex. So with that, I think I will finish off and we'll go over to Q&A. And Patrik, come back.
Thank you very much, Toby and Patrik. So the sales for the quarter increased, landing at 84.4 million SEK compared to Q1's number of 29.7. Is it as simple as production ramp up that explains this increase?
Yeah, and sales, of course. So yeah, I mean, we're selling what we're having, and we're filling up the value chain. It's a quite long value chain. So, but that is what explains it all, you know. But also, again, the quality. If we would have high numbers of, you know, out of spec materials, that would of course make it a lot more difficult to ramp up. You would have to rework, or you had to sell it at lower prices and so forth. So it's important with those quality numbers, as I keep rambling on.
We'll delve deeper into the production numbers, but I'm also curious about the current economic climate. You introduce your CEO note by talking a little bit about the geopolitical situation and the macroeconomic climate. Could you elaborate a little bit on how it affects your P&L?
We have a tough situation in the world. I mean, we see that almost all markets in the world are slowing down, and interest rates are being hiked and so forth. But this is also true for China, which is a large market for textile manufacturing. And we could also see that during the first half of the year, a lot of brands had a lot of surplus stocks and so forth. But we see it also that it's starting to ease up, and knock on wood that actually continues. And where let's say the macroeconomics will end up with the war on Ukraine and so forth, the inflation hike, the increase in interest rates and what have you not, I'm not able to say, but it looks like, at least on the textile sector, that the worst has kind of passed, and we're starting to see some lightnings when I talk in the industry. But it's a bit early to say, but it looks at least that we are going towards a little bit better future.
What signs are pointing towards that?
Well, we see that they're starting to become a pickup in the fiber market. It's the prices are stabilizing, coming up, and so forth. But we also see a huge interest for our products from the fashion brands and from the whole value chain. So from our perspective, we're not that much affected just from this, because it's a new product. We're still on small volumes compared to the big scheme of things. So those two are the ones that I would point at.
Toby, when you walked us through the profit and loss, you talked about your gross profit and how these raw material costs has driven it to become still a negative number, but smaller and smaller. Will you reach a positive gross profit in 2023?
Yes, yeah, I hope so. I mean, it's a forecast, of course, but I think the first thing that will happen is gross profit will turn positive, yes. So I expect that to happen, touch wood, fairly soon as the volume grows. And the effect is, as we grow the volume, we get better yields. That's the main effect, that we're using less energy to produce a ton. We're using less raw materials to produce a ton, better yield there, less water, and so on. So that's the primary effect. We also see an effect in the second quarter, and we'll see similar in the third quarter. The energy prices reduced versus quarter one, so that has some effect as well. So yes, I expect to see gross profit turn positive.
Let's delve deeper into the production then. Is it growing as expected? Tell us more.
Yeah, in the third quarter, we have continued growing. So we are currently, let's say, last month in July, we produced 3,000 metric tons. Actually, we produced 3,100 metric tons, but 3,000 tons were within specification, prime materials we call it. And so that's 97% in control. So we feel that we're getting to know our plant. And that means that we can also continue, increasing. But what we also seen is the certain areas where we had to do some rebuilds. So that have happened during August. And we've just finalized that and now fine-tuning that. And we will also, when you have those type of numbers, we know these raw materials that we've been running. We feel confident with those. But we will also start doing trials with other type of textile waste and so forth. So with these numbers, I feel confident to continue driving the improvement of the plant, both on raw material side, but also on certain smaller parts of the equipment that we need to tweak a little bit. So it looks positive. A ramp up is always a ramp up. So we are always careful about that and saying something could happen, but so far so good, and risk is coming down considerably as we go forward month by month.
A viewer has sent in the question, what is your total production year to date?
You have that number.
I don't have it in my head, I'm sorry, but that slide Patrik showed, you add up the production numbers and you...
Yeah. So those are the numbers,
But when you reach 60,000 ton, which is your goal, how quick do you think you can reach 120,000?
Well, I think that's a minor change. I mean, we have the majority of the plant is built for 120,000 tons. I would say 90% or so. So it's not going to take as long as it did with let's say 1A, the 60,000 tons. So an estimation would be about a year or a year and a half max. However, I want to stress that we will not do this in one step. We will actually replace bottlenecks where we see them as we go forward. So it will be gradual changes towards the 120,000 metric tons.
What sort of lessons do you take from building the first 60,000 tons to then expanding another 60,000 tons?
Well, in the first 60,000 tons, we got a lot more dust than we expected. We have also seen that we needed to do some changes in let's say, the shredding areas and so forth, which have been done, and that will just be multiplied or transferred into the next 60,000 tons. But we also have certain equipment that we have both developed ourselves, but also invested in, that is taking away the dust in a much more efficient way. So those things will, of course, bring forward into the next up to the 60 to 120,000 ton expansion.
Before we talk to the analysts, I want to also take a moment to talk about the financing and the directed share issue. 240 million SEK directed share issue, and you repaid short-term credit facilities, and also to give the company a financial base, at least that's what it says in the report. Out of the 240 million SEK that you were managed to raise, how much remains for the company?
Yeah, well, we raised the net 231 million after transaction costs, so that's the net raise. We had a short-term credit facility which we secured with the banks at the end of Q1 or early Q2, where we had drawn 37.5 million. We've paid that back because there's no point paying extra interest on drawn credit facilities. So that's what we've repaid. We have, then it's a case of managing our interest cost. We don't want to be paying more interest than we have to, and hold cash on the balance sheet if we can manage our interest costs better. So we'll consider, short-term repaying some credit facilities which are still available to us. So just to manage interest costs.
So you want a higher equity ratio?
We want as high an equity ratio as possible, always.
But this share issue was made towards major shareholders. Which ones?
Basically, you could say the major shareholders, nearly all of them supported in the share issue. So it's a kind of a strong support from the full list of major shareholders, and then a few more who came in with significant investments as well. And there are maybe Stora Brand was one who's come into the top 10 and took a big investment through the share issue as well. So good support.
Let's turn towards the analysts then. Elliot Jones from Nordea, welcome and ask your questions.
Thank you. Good morning, guys. Congrats on the report and for the developments once again. Just two from me. Firstly, just piggybacking on the production question. Is there any way of you guys giving us some kind of yardstick potentially for Q3? I know you guys had, like you say, had the downtime, but could you give some idea in terms of, potential utilization rate or versus Q2 levels? And then the second question is, I suppose, the inventories that Toby you touched upon. Obviously, you're drawing down on the inventories, which is a good thing, as those were probably a bit expensive. Do you expect to still draw down from this, and how long do you reckon that would take before that's all kind of done, I suppose?
Yeah, when it comes to the production numbers, we have actually had some stops also in July and in where we also did some amendments, as well as we done in August. So we have done that in two phases. That is done now. We are trimming the equipment, so I expect the volume numbers to be a little bit less than in quarter two. However, these changes that we're doing are in order to continue the ramp up as we go forward, and it's minor changes, but they also need to be trimmed. So I think that could be the guidance. It's not going to be that much less, but it's going to be a little bit less, I think. But it depends on also how the numbers are panning out, of course, in September.
Yeah, so maybe just to add on your second part of your question, Elliot. So I think maybe on comment on the first. So July was very strong. I think we were very pleased to see the July production. August we have this production stop, so you know that, and then September we have to see. I could also mention we're bringing down our raw materials, as you mentioned. We had a high balance of raw materials that we're working down. We've had good production, so we've started ordering in new raw materials, which we don't expect to come in until quarter four. So from quarter four, we'll start producing with newly ordered raw materials somewhere in Q4. We'll have to see. It won't be the whole of Q4, but and then
which also has a positive.
So which have a lower valuation. So it's not cash flow, but it's a lower valuation than what we have in stock. I think it's also worth mentioning in September we'll have an effect that we're using some of the raw materials, a broader range of raw materials from our stock, and we plan some tests of different kinds of raw materials. So that's.
Can I continue on that a little bit? When you're getting to 97% of quality in spec, you have your equipment together, you have your processes together. That means that we also can allow ourselves to take a little bit of swings when it comes to testing different newer type of raw materials or other type of raw materials, and there you need to tweak it as well. That will help us as we go forward to buy raw materials throughout, so we can actually have a broader spectrum of raw materials. So we are taking the opportunity of also finding the process windows for other type of raw materials. So looking quite positive. We have also already started doing that. So we're going to continue that also during September, as Toby says.
Great stuff. All clear. Thanks, guys.
Next analyst is Sofia Sörling from Carnegie. Welcome.
Yes, thank you so much, and hi Toby and Patrik. So my first question, if I may ask if you could elaborate a little bit on your comment there in your CEO word about the challenge going forward is to secure that volumes of yarn, fiber, and textiles made from circulose are present in sufficient quantities. Like, what does this mean? And yeah, if you could elaborate on this. And also, second question, you mentioned China, and you have many of your fiber producers are located in China or in Asia. If this worsen, can you be flexible and deliver to other fiber producers, for example, within Europe? Thank you.
Yeah. If we start on the first one there, the value chain, we are supplying, of course, to the fiber producers, and when we are ramping up, they are ramping up also. So that means that they're going from smaller lines to bigger lines. So that is a ramp up from their side, and then it actually goes forward in the value chain into larger spinners, spinning lines, and then into larger weaving lines and so forth. At the same time, we're filling up the whole value chain here, so that when the brands are coming with their demand to the textile manufacturers, there will be materials available. And the brands are, they need to see, of course, also that there is enough raw materials in order for them to make big launches and big commitments. So all of this is just is building up the value chain and supporting the demand throughout that value chain. So I think that's the answer to your first question. Sorry, your second question was?
Can we supply to fiber producers outside
exactly.
China? Yeah.
Of course we can, and we are working with suppliers outside of China. However, let's say 70-80% of the man-made cellulosics is being produced in China, but there are others outside of China that we're also collaborating with. So yes to that question.
All right, thank you.
Then we welcome Tom Guinchard from Pareto Securities.
Perfect, thank you. Hey, Toby and Patrik, just a clarification on the inventories. You said you're going to have continued inventory release here in Q3 and start building up again in Q4. When moving toward the 120K production, can we expect a similar pattern in working our inventory build up here?
Yeah, we are we expect to work down inventories also during Q3, and then building up again somewhat during Q4, but we'll also have a higher production rate, so it shouldn't be a big build up. But then when moving to 120,000 tons, we will also need to have a bigger inventory stock to be able to manage 120,000 tons. But that's some quarters away, so that effect is not there for the time being.
Yep.
But you will not see that we bought a lot of different type of raw materials in order to support the start of the plant, and we will not build as much stock as we did for the start of let's say the first 60,000 tons. So we will the start of going from 60 to 120,000 tons will not have a kind of a significant build up before we start the plant. So in that sense, you will not see the same pattern.
All right, perfect. Thank you.
Yeah, we know much better now which kind of raw materials and where to stock and what kind of risks we have in terms of supply disruptions. So I think when you're at a bigger volume, you need less. The safety stock you need to hold is also, as a percentage of the size of your production, is smaller as well.
Yep. And the second question, you managed to scale production quite rapidly here from 1,000 a month to around 3,000. What are your primary obstacles here to reach the 5,000?
Right now, if you ask me right now, it's trimming. I think we've done most of the investments needed. I cannot say that we'll not have one more or some smaller things, but from my perspective at this moment in time, it's about trimming the equipment and getting the dust out of the way and so forth. So I don't see any big investments as we go forward. It's trimming.
All right, perfect. That's all for me. Thanks.
Then we turn to our last analyst, Hanna Grimborg. Welcome to ask your questions.
Hi, thank you. Can you hear me?
Yep.
Yeah.
Okay, super. So I actually just have one question, and you just mentioned this. But when you, what are the biggest risks that could cause you to miss your production target of 120 tons? Like the biggest risk factors?
Yeah. I mean, when it comes to production, it's expanding on existing equipment. So I don't see as a huge risk factor. We have under contract the raw materials is under control. We have 140,000 tons under contract already. We will do this as we see it go forward. I see little risks as in that sense. I'm trying to find out the risks that I would be sleepless about, but you know, for whatever reason, the customer wouldn't take it. But I don't see that as a risk either. I mean, there's a demand out there that needs to happen, and I mean we just need to build on what we have. Plus, that when we are doing this increase, it will not be in one step from 60 to 120,000 tons. We can actually do this gradually, depending on the type of equipment that we are that we see that we need to install. Toby, what do you say?
Yeah, no, I think I think on the one hand we are doing something new. It's a new process, it's a new technology, it's a new product. So it's a new type of business. But on the other hand, month by month we are increasing our production. We are learning. Our customers are getting used to the product. So it's the kind of proof is in the fact that we're ramping up and getting better and better. I think other than that, as Patrik says, we have security around the raw material situation. We have offtake agreements with major customers. We have we have a production that works and we're selling at a price point that we expect to meet. So we're proving it month by month. But there's still some way to go, and ramp ups. Unfortunately, just to reiterate, ramp ups take time. It's not unusual, but these kind of lines they don't just go on and off. They do take time to ramp up, and you have to learn the operating windows and so on. So.
And also customers are going from 30% blend in to 50% blend in, which gives a stronger even a stronger incentive for brands to use the materials. So, I mean, so in that sense it goes in the right direction. So, yeah, I think that's the end. We don't see huge issues, but we're always careful with when we're presenting, and rather be a bit careful than being too optimistic.
Okay, thank you. That was my only question.
Thank you.
Then we extend a thank you for all participating analysts, as well as you, Toby and Patrik, for being here, presenting and answering our questions.
Thank you so much.
Thank you.